Today we're going to talk about the monetary policy and the role of the MPC. Welcome to our monthly MPC meeting. Here we'll be setting the interest rates to meet the future inflation targets.
Monetary policy is government or central bank decisions on the rate of interest, the money supplies and the exchange rate. Interest rate is the price a borrower pays for the use of money they borrow from a lender. For instance, a small company might borrow capital from a bank to buy new assets of their business, and the return a lender receives for deferring the use of funds by lending it to the borrower.
Monetary policy is similar to fiscal policy, involving tax. It aims at shifting the AD curve in order to bring about macroeconomic objectives.
There are 9 of us in the committee, each of which are independent and has a vote to set interest rates at the level which we believe is consistent with meeting the inflation target.
I am Mervyn King, the Governor of the Bank of England and Chairman of the MPC.
I'm Charles Bean, Deputy Governor.
I am Paul Tucker, also Deputy Governor. I am Spencer Dale, Executive Director and Chief Economist of the Bank of England.
Hiya! I am Paul Fisher, Executive Director.
Me, Dr. Adam Posen.
And me, Dr. Andrew Sentence.
We set the rates of interest to avoid increasing inflation.
We want to avoid inflation, which is sustained rise in price, because it increases the prices of the goods and services, thus affecting the economy.
The inflation report includes the MPC's latest forecasts for inflation and output growth.
Because monetary policy operates with a time lag of about 2 years, it is necessary for the MPC to form judgments about the outlook for output and inflation.
The MPC was first formed in 1987 and originally gained independence in 1997. I'm Tony Blair, and I was the Prime Minister in 1997. The Bank of England was founded in 1694 to act as the government's bank and debt manager. Since then, its role has developed and evolved, centred on the management of the nation's currency and its position at the centre of the UK's financial system. The history of the bank is naturally one of interest, but also of continuing relevance to the bank today. Events and circumstances over the past 300 years or so have shaped and influenced the role and the responsibilities of the bank. They have moulded the culture and traditions as well as the expertise of the bank, which are relevant to its reputation and effectiveness as the central bank in the early years of the 21st century. At the same time, much of the history of the bank runs parallel to the economic and financial history, and often the political history of the United Kingdom more generally.
At our last meeting, we decided to keep the interest rate at 0.5%. Our target rate for inflation is 2%, but is currently running at 4.4%. This means that Mervyn King will have to write a letter to George Osborne explaining why this is.